Okay, so today we're going to study integrating diverse suppliers. Develop strategies and procedures for integrating diverse suppliers into supply management and sales enablement processes. So, diverse supplier certification process. So, diverse supplier programs continue to grow in the US, mainly because of government legislation, social responsiveness, alternate sources of supplies, need to increase market share, and need to meet the demands of customers. So in consumer products or consumer services industries, customers will dictate that companies have good diverse supplier diversity programs in general and diverse supply programs in particular. If you don't do that, then they don't buy your products. So the supplier must first be certified as a diverse supplier. We'll cover that in E-1. Then the supplier can be moved into the organization's overall supplier qualifying program. So qualify them as a diverse supplier first, and then qualify them as a general supplier second. Business strategies, corporate responsibility includes transparency of companies as well as taking into consideration the expectation of their stakeholders. And business case for supplier diversity has evolved from addressing only social responsibility issues to elements of business-driven interests. Person can make a meaningful contribution to reducing the company's cost while also contributing to the company's socially responsible behavior. And supply chain management is now a recognized part of strategic planning and can develop processes that mesh with corporate operations, basically. Operating with safety and environmental tolerances is a strategic enabler in creating greater efficiencies because you don't get bad press. So economic and market forces. This is your Econ 101 review. Types of economy. So you got a free market economy. Prices determined primarily by supply and demand. Prices can still be influenced by market structure or fixed by regulation. Pure free market economies do not exist. There's always some government or trade regulation. Centralized economies. Prices determined administratively. It shows China is a centralized economy trying to move to some kind of a market economy. And there's a closed economy, severely limits trade outside the national border. North Korea is a closed economy. They do not or are prohibited from trading with the rest of the world. So then there's the mixed economy, mix of state-owned and private industry. So most countries operate with a mixed economy, depending on the degree. So Russia has a mixed economy, but there's a lot of state-owned stuff there. Same with China. We have a mixed economy to some degree because we have regulated monopolies that are like power that are regulated by the government. Global flow of goods and services. So there's something called protectionism, government interference with the free flow of goods that are harmful to the domestic economy. Tariffs. Many countries hold advantages in certain commodities, such as raw material, labor supply, climate. The natural flow of free trade can be disrupted by many factors: embargoes, quotas, tariffs, dumping. This is why you can't have a completely free economy because countries engage in all this stuff. Business cycles and trends, the swings in the economy. So the business cycle has 4 phases. We're going to start with contraction or shrinking of the economy. Then the next phase is going to be recovering or resuming a growth path. Then you're going to have expansion beyond the previous high, expanding growth. And then you go into slowdown or declining growth and then back to contraction or shrinking. Overlaid on this pattern are long-term economic trends and seasonal patterns. This is why you can't say every 5 years there's going to be a recession. You don't know. Could be 5 years, could be 25 years. I mean, last recession we had was 2020, and it was pretty short. The one before that was 2009. So that's 10 years. Business cycle forecasting models rely on leading indicators such as average hours worked, stock prices, construction starts, etc. So here's the stock, bond, and commodity prices can help identify the economic cycle because these are all things that are published daily in the financial press. So here's phase one, contraction. And this blue line is gross domestic product. So in phase one, you're below capacity and gross domestic product is declining. Bond interest rates peak at about this point and they start trending down through here. Once bond prices start trending, or bond rates start trending down, which means bond prices are trending up, stock prices will then bottom and start trending up. And then finally, in phase two, the recovery, you're still below capacity, but now you're growing. Commodity prices, wheat, yeah, copper, those are all commodities. They'll bottom here and prices will start going up. And then in phase three, the expansion, the bond interest rates will peak. You're above capacity now and you're still growing. And this is where the Federal Reserve starts to raise interest rates. They start in the cycle here to raise interest rates. And then that Federal Reserve raising the interest rates, the bond markets already started down. It's going to cause the stock market to start down when you move to phase four, which is slow down. And then before the commodity prices peak, generally, the Fed will start lowering rates because the GDP is declining. And then you come back over to this side. So relative ranking by average return down here. Bonds are a proxy for interest rates. Let's see if we got a website here for bond prices, Market Watch. US 10-year Treasury note. It's usually the common thing for bond prices. Stocks, usually the S&P 500 right here. And then commodities. CRB commodity index is a good one. First bonds, bottom in phase one as credit demands weakens, and after the Federal Reserve eases the discount rate between phases 4 and 1. So the Federal Reserve is dropping the discount rate or dropping interest rates. What I got here for bonds. Yeah, so here's the Treasury yield curve. You can see right now it's not inverted, but it's inverted through here, which is kind of weird. Short rates are still very high. This is 1 month. This is 1 year, 2 years, 3 years. So it's inverted between 1 and 3 years. But it's normal slope between 3 years and 20 years. But it's still kind of weird. Stocks eventually sensing that the falling rates will result in another recovery. This is the Fed is dropping interest rates, anticipate the revival by bottoming and then starting up. And then later commodities bottom in late phase two and sustainable demand by commercial users pick up. The price rise in commodities and associated pickup in demand for credit later causes interest rates to move up. That means the start of phase three and the peak in bond prices. So the Fed is tightening in this phase here. And eventually a rally in interest rate picks up steam, worrying the equity market participants, read about the next slowdown. And then we're back to phase four. When reduction in end demand pushes commodity prices lower, late phase four then takes over as all three asset classes are now in declining mode, and cash is the only safe investment. That's here. Everything's going down. And then it bottoms and we start up again. All right, transportation trends. Analyzing transportation trends is useful in understanding the impacts of cost changes. Overcapacity in container, air freight, and sea freight markets has led to several mergers and acquisitions. And low oil prices have resulted in lower costs and thus lower revenues, resulting in cost-cutting measures by transport companies. So government policies influence markets through monetary and fiscal policies, and political instability, new administrations, shifts in political climate can affect business profitability. And it can even be, if you noticed in the United States, we've affected the business profitability even with the change in presidents. So world industrial migration, shifts in manufacturing around the world are caused by labor, inflation, interest rates, and currency rates. Depending on the business, they shift around chasing one of these. And import-export issues, free trade versus protectionism, tariffs, quotas, embargoes. If everybody played fair, this wouldn't be an issue, but not everybody plays fair. Environmental concerns include the following: hazardous waste amount and emissions and non-hazardous wastes that are safe. Land use and control of commercial operations on public lands. Economic indicators. So leading, these are a measure of economic indicators that changes before the business cycle does. Things like stock prices, building permits, average weekly hours worked. Here's a next spot that will give you plot the LEI for you. Well, this is 2020. And it's continued down for quite some time. And then lagging are things that, okay, it's not going to let me go there. Lagging are things that change after the economic cycle has changed. Corporate profits, business spending, unemployment rate, these are all lagging indicators. And then there's coincident indicators, things like personal income, number of unemployment, insurance claims, industrial production. These things change with the economy. And it won't let me go there either. So the ISM report on business, or the ROB, macroeconomic forecasting tools. So you got manufacturing and services or non-manufacturing. Monthly survey of businesses. If the number is over 50, the economy is expanding. If it's below 50, it's shrinking. This is what it looks like. And it has all these different breakdowns and parts. So here's the top PMI number here. April index for this year was 57.3. I think this is the, oh yeah, here's explains the value of the ROB and how it works. And then this is the ISM.org to get the report itself. They have a hospital now, but unless you're in that industry. Economic data sources, government publications. Federal Reserve, Department of Congress publish most of the data. State departments of commerce and the UN also publish data. So private publications, ISM's a private publication. Other things like the Wall Street Journal, MarketWatch.com. I don't think this thing's still free. Yeah. Commercial forecasts. Many banks and industry groups publish economic forecasts for free. And regional surveys, local affiliates, the ISM, they used to publish a lot of these. I don't think they do this much anymore. And internal historical data used mostly for specific commodities or seasonal demand. Industry sources, newsletters, associations, etc., and online indices and search engines. UN, Organization for Economic Cooperation, Development, International Monetary Fund, these all have data sources. Channel partners, customers may view stakeholder actions as a direct representation of the buying company where supplier diversity matters are concerned. So distributors often have contacts and relationships that are valuable. Will hold inventory and resell it at a markup, understand the local business culture, and generally consider wholesalers. So if you're buying in really large volumes, you probably don't want to use a distributor, but if you're buying smaller volumes, they can come in handy. Resellers. That is a company that purchases goods or services with the intention of reselling them again rather than consuming them. Electronics industry, this is often called the gray market. System integrators, company that specializes in bringing other component subsystems into a whole. Business solution partners provide services, deliver or expand e-commerce solutions, and brokers and agents. Company that arranges a deal between two companies in a supply chain. Customs broker and logistics, as an example. Teaming agreements. These teaming mechanisms permit government contractors to better respond to solicitations while offering the federal government the benefits of improved bid. This is something the federal government does. Joint ventures is a business entity created by two or more parties, generally characterized by shared ownership. Companies typically pursue joint ventures for one of a few reasons listed below. Access a new market, gain scales of efficiency by combining assets, share risk for major investments, and access skills and capabilities. It's important to understand both companies' positions with respect to supplier diversity. A mismatch could have a long-term negative impact on a company who has a positive supplier diversity program. Got to get the right partner in a JV. Mentor protege. U.S. Department of Defense has a comprehensive mentor protege program, or they used to, may not anymore. Purpose of the program is to provide incentives for DoD prime contractors. Prime contractor and federal procurement is a first-tier contractor. Protege firms are business entities owned and controlled by economically disadvantaged group and qualified organizations employing the severely disabled. Franchise and license agreement. A franchisor licenses its know-how, procedures, intellectual property, and use of its business model, brand, and rights to sell its branded products and services to a franchisee. McDonald's is a franchise operation. It is critical to establish expectations of the supplier diversity when venturing into these agreements. All right. The ISM report on business is a widely watched and highly regarded leading economic indicator. Unlike government data, which can be months old when released, what does the ISM ROB data describe? Data for the previous quarter's activity. I don't think so. Data for the previous month's activity. That sounds good. Data of the daily market activity? No. Data provided on a weekly basis? No. Got to be B. And B it is. Here, significant change in economic activity is what we call the business cycle. Which of the following is not one of the four phases of the business cycle? Expansion or highest point of the economy? That sounds like one. Recession or shrinking of the economy? That sounds like one. Recovery or resuming growth for the economy? That sounds like one. Flatline or stagnant growth? That doesn't sound like one. So that should be D. And D it is. All right. Summary. Identification of diverse suppliers is fundamental to supplier diversity initiatives. Yeah. Companies should look across the entire supply chain to ensure supplier diversity initiatives are being focused on. System integrators are companies that specialize in bringing together component subsystems into a whole. Business solution partners provide services to deliver or expand e-commerce solutions. And a mismatch between a joint venture partner supplier diversity initiatives can have a long-term negative effect on the company who has a positive supplier diversity program. Teaming mechanisms permit government contractors to better respond to solicitations while offering the federal government the benefits of an improved team bid. All right, that's that. Let's go get some questions for B4 here. Oh, exam questions. B4. All right, we have got, well, 7 questions. We'll go over the answers in a few minutes here. B4. Six questions. All right, let's go some answers. Number 1 is option A. Coincident changes with the general economy. 2 is B. Internal historical data and internal records include raw data such as lead times, etc. 3 is Charlie. Commercial forecasts from economic organizations are available for a fee. 4 is Delta. Lagging marketing indicator of economic activity changes after the economy. 5 is Charlie. A leading market indicator changes before the economy. 6 is Alpha. Project scope, goal setting, execution identify skills associated with strategic planning. And 7 is Alpha. There is little competition, so a qualified diverse supplier may be able to add some more competition. All right, that's what I got for you. So tomorrow we will cover B5.